Hi, my name is Ishali Mulchandani, and I'm the proud founder of IDM Chartered Professional Accountant. Today I'm going to talk about real estate investment. We have lots of clients who invest in real estate, and they always have a lot of questions, and sometimes they have myths that I would like to clear in today's video. So when you invest in real estate, there are a lot of expenses you can offset against the rental income. So, for example, interest. A lot of the times clients think they can write off the mortgage payment, which is principal and interest. No, you can only offset the interest expense. But you can also offset things like property tax, any utilities you might have paid, any agency fees that you might have paid, and a lot more expenses that are directly related to your rental activity. One of the most common areas that people get confused about is repairs. A lot of the times you do have to repair your property to make it rentable. Those, like you fix a tap or you fix something that's broken, those are repair in nature, and it doesn't matter how much you spend, you can offset it in the same year. But if you spend money, if you spend a lot of money to enhance the value of your property, that is capital in nature. You can still get a deduction for it, but not all in the same year. It is amortized over its life. It's called CCA, capital cost allowance. Now, sometimes people forget that they can also claim travel expense, but that can only be claimed if you have 2 or more rental properties. So if you have 2 or more, please note that it would probably take you to drive to that place to either collect rent or check on your tenant and go from one to the other. So be mindful that that could be a deduction that you might not be claiming and missing out on. Now, a lot of the times people ask me, should I take my rental, take all my real estate investments within a corporation? There are pros and cons of doing each way. There is no one-size-fits-all answer to this question. And I can't possibly tell you, if you have more than these many properties, you shouldn't take it under incorporation. It's a very, very unique situation as to how many owners there are, what your short-term and long-term plans are for this property, and so on and so forth. So it's always a good idea to talk to a tax professional and tell them exactly what your plan is, what your outcome is for your real estate portfolio, and get proper guidance on what structure you should be investing in your real estate portfolio with. If you have any questions, we're happy to help. Reach out to us and we'll have a talk. Thank you for watching and have a wonderful day.